ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hi, good evening, everyone. Thank you for joining us again. So, first, usually, if you guys can hear me, please type yes in the comment section below so that we'll make sure everything is clear, everything is fine before we start. And don't forget to like and share this video so that more of your friends and family can watch and learn about today's topic because there's nothing to do at home during the MCO phase 1 or phase 2, so it's the best time to learn something new. Okay, so if you can hear me, please type yes in the comment section below. Okay, I hear Lim says yes. How are you doing? And Ajma, okay, a few of you can hear me. So today we're actually doing something very different. We're going to look into the foreign market, something different. So if you've been trading local stocks and actually want to learn how to look at foreign shares or REITs or whatsoever, so you need to stay tuned for this topic. And that's why today we have Li Chu here. Hi Li Chu, how are you doing?
Hi, Don. I'm good. How are you?
I'm fine. Just at home. I don't think there's much to say. Okay, so before we start, right, maybe you can go through with us like what will the audience have in store for them today.
Yeah. So I think today's topic is about exploring foreign investment opportunities within Bursa Malaysia. So I think a lot of us sometimes think that, hey, the local market is, not doing too well. What are the available options for investors to invest? Let's say they want to look to having exposure in other, outside of Malaysia, and yet you don't want to get out of Malaysia, right? Meaning you don't want to get out of Bursa Malaysia. You still want to trade within Bursa Malaysia. So today we'll talk about two ETFs. We'll be highlighting two ETFs where investors can actually get exposure to Asia REITs, Asia ex Japan REITs, as well as China.
Okay, that's really interesting. That's something I want to learn as well. So I don't want delay anymore. So I'll pass the floor to you. Thanks.
Okay, sure. Thanks, Don. Okay, let me first share my screen. Okay. I'm guessing that you guys can all see my screen, right? My slides. Okay. Let's wait for some response. It's a bit delayed. Okay, cool. So if you guys can see my screen, can you please type 1 so I know that, you can see my screen very, very clearly. Okay, very good. Can see slide clear. All right. Let's start then. Let's explore the foreign investment opportunities within Bursa Malaysia. But before I get into it, as usual, we always start with our disclaimer. So today's sharing is brought to you by Afin Huang Asset Management, and the entire content that we intend to bring to you tonight is educational. And if you are interested in any of the products that I mentioned tonight, you are encouraged to go to our website, tradeplus.com.my, and read up the prospectus or supplemental prospectus that is available, and before you make a decision to invest into any of the funds. Okay, now before I start, I want to just check how many of you here actually attended the previous webinar that I did with M Plus that talks about the basics of ETF. If you were here, give me a yes in the comments. Okay, if you were here in the previous session, I think I was here maybe about 3 weeks ago, if I'm not wrong. If you attended the session, type yes, so I know how fast or how slow to go, because I still have a few introduction slide on ETF. Okay, all right. Cool. I see a few of you say yes, which means you guys were here. Thank you very much for coming back to part 2 of my sharing. Now, so for those of you who were not here, it's okay, because I will still go through very, very quickly what an ETF is before I jump into the solution that we have for you. Okay. Now, for those of you who don't know what ETF is, I'm sure all of you would know what stocks are, right? Because the fact that you're following M Plus, you probably have a trading account with M Plus, so you know what stocks are. And I am very sure as well you have heard about unit trust funds. Okay. Now, ETF is a hybrid between unit trust funds and stocks. So think of it like, as if unit trust funds and stocks got, they got married, and then the anak is ETFs. Okay. So when, as a child of your parent, you will naturally inherit some characteristics of unit trust funds and some characteristics of stocks. So ETF sits in between, where it takes on the features of a fund, like having a diversified portfolio, being professionally managed, and of course, when it's being managed, you are charged a management fee. Now, on the other hand, you also inherit some of the characteristics of stocks, whereby you are, able to continuously trade on the exchange throughout Bursa's opening or trading hours, and at the same time you buy and sell through a brokerage account, and you can actually margin or lend out the ETFs if you have a securities borrowing and lending agreement in place. So generally, we always call ETFs as index trackers. Generally, okay, I know that it is not and 100% yes, because in the US they are actively managed ETFs where they do not track an index, where the fund manager will manage the ETF just like how they manage a unit trust fund. But typically, when we talk about ETFs, the things that we will associate with is ETFs are index tracker, which means that it tries to mirror the performance, mirror the constituents of the index, and then ultimately deliver the performance of the index to you. Because we in the past, right, perhaps before 1993, many investors invest in unit trust funds, and they always use or measure their performance against a benchmark, right? And they usually use the S&P 500 index. And this S&P 500 index, over time, people started to think and say, hey, how can I get hands on the S&P 500? As an individual investor or retail investor, it is almost impossible for you to buy all the 500 shares of S&P 500. And that's how ETFs were born as a result of investors' demand wanting to invest into the index directly, but they cannot replicate the index themselves. Okay. Now, second thing is that for unit trust funds, what we usually call them actively managed products, which means that the fund manager does a lot of homework, does a lot of research, trying to piece different stocks together into a portfolio, and their ultimate goal is to outperform the index, which is why every time if you open your fact sheet of a unit trust fund, you want to see or select a fund that ultimately delivers outperformance against the benchmark. Whereas for an ETF, if you are selecting an ETF, it is important that the ETF has to track the performance of the index very, very closely. If it doesn't track the index closely, then this may not be an ETF that you want to consider. Now, so how are ETFs different from unit trust funds? So like I said, because it inherits some, features or characteristics from unit trust funds and stocks, the main difference are essentially how the portfolio is being managed, i.e., passive, which I just explained in the previous slide. Secondly is the fact that unit trust funds are actually traded once a day. Okay, whenever you buy and sell, you don't know what the price is until the end of the day, when the fund manager or the valuation agent calculates the NAV of the fund. Whereas for an ETF, it is traded intraday. Whenever you buy and sell, you know exactly what price you are buying and selling. Another feature or general difference is, of course, management fees. Typically, unit trust funds has got a higher management fees because of the work that the fund manager has to put into, right? So even though it is higher, but it doesn't necessarily mean it's not good, right? Because there are some good fund managers who can consistently outperform the benchmark. Now, when you talk about sales charge, of course, the upfront charges are different between ETF and unit trust funds, because ETFs are listed products, are listed funds. Therefore, you pay brokerage fees. Stamp duty, you pay clearing fees. Whereas for unit trust funds, you actually pay sales charge, which sometimes could be up to 5.5%. Now, I'm going to stop here because I know a lot of you here probably will say that, hey, sales charge is too exorbitant because you're paying 5.5%, right? I want to make a point here to investors, saying that today, if you look at your investment amount, do not so quickly judge and say that unit trust is expensive, because bear in mind, if you invest into an ETF or even stocks, you have a minimum brokerage that you need to pay. So imagine if you are buying or investing 100 ringgit and you have to pay a minimum brokerage of 10 ringgit. Essentially, you are paying 10% of sales charge, right? So I would say that, you know, when people compare sales charge and brokerage fee being, you know, different charges, again, it boils down to the investment amount that you are actually putting up. Otherwise, you know, despite it being cheaper in terms of percentage when you trade ETFs, but it doesn't necessarily mean that it is actually cheaper than buying a unit trust fund. So this is something that you have to actually take note. Okay. Secondly, because it is listed on Bursa Malaysia or any exchange in the world, it is actually traded via a broker. And most of the time, you know, there is, I would say, minimal advice given to you. You have to select and do your own due diligence, do your own research, and decide what ETF to buy. Whereas unit trust funds, typically there is a sales agent guiding you or advising you what products to buy. Okay, so I am done with a very quick three slide introduction on ETF. Now, let's jump into the first product that I'm going to introduce to you, which is China. Okay, how many of you here actually think that China will overtake US as the largest economy? Type yes if you think that China is going to overtake US as the largest economy in the near future. Okay, let's see how many of you here actually think that China will overtake US. Yes, I see some yes. Okay, so if you think that China will actually overtake US as the largest economy in the world, that what does it mean, right? It simply means that you need to get your hands onto something that invests into the Chinese market, right? So today I'm going to talk about, or rather introduce a product to you that allows you to get exposure into the new China economy. Okay, now what's all and what's not? Okay, let's talk about the new China economy. Okay, I know some of you here say that, you know, oh, US won't allow China to overtake, you know, and things like that. Some say yes and no. Some say in terms of GDP and stuff like that. Later we can debate a lot more about this. Okay, so let's talk about new China economy first. Okay, so what's all and what's not, right? The old China is all about labor intensive manufacturing. Why? Because today, if you were to grab, you know, grab a thing, something, you know, and, you know, for example, a mouse, and if you flip to the back and it will say what? Made in China, right? And, you know, even clothings, apparels and stuff like that, it has always been known that the labor cost in China is cheap, and they have always been known as a manufacturing hub. But I think a couple of years ago, maybe about 5 to 8 years ago, the President Xi Jinping has stepped out to basically say that, you know, hey, we, you know, as China will now transition and move ourselves away from you know, a labor-intensive manufacturing industrial market to now being a consumer and service-focused economy. So what exactly do they mean? Essentially, what they mean is that they want to be able to, rely on consumption, especially domestic consumption, as well as technology, okay, in order to bring the country forward. So they don't want to be known as, you know, made in China anymore. They want to move away to being high tech. They want to move into being a consumption economy. So if I were to compare what is old economy and what is new economy, and you will see that, you know, hey, old economy is really about all this heavy machinery, steel, textile, apparel, and stuff like that. New economy is not about all these old economy sectors, right? It is all about travel and tourism, it's about education, it's about healthcare, it's about beauty and personal care, it's about internet and e-commerce, right? We all know the Alibaba Singles Day sale, and financial services or insurance, as well as clean energy, because China did say that they know that they have been polluting the world, and they are now focusing on trying to move away from that and heading towards clean energy. Now, when we talk about New China, then you'll be wondering, right? How would the New China economy sectors, stocks within this sector actually perform versus the other China indices? Now, because the direction, right, from the President Xi Jinping that says that they want to move into New China economy was only out sometime in 2010, and that's why this particular China economy sector is only a very recent index. So if we were to compare the S&P New China sectors XA shares index since 2011 versus your very conventional index like MSCI China, like FTSE China 50, like Hang Seng China Enterprise Index, over this 11 years, 10 years, it has actually grown 302% versus the other sectors, or rather the very conventional China indices, which is up only 180%, 100%, and even 64%. Okay, so this is the long-term performance of the New China economy. So why then do you want to invest in New China? Why don't invest in the old China? Why don't invest in banking of the China in China, right, and stuff like that? So as we all know, okay, the reason why we should be looking at New China is simply because of one partly because of internet usage, right? Today, everybody here cannot live without a cell phone, a mobile phone, right? I think now that we are all in a lockdown, right, we use our mobile phone even more. Every other minute you are just swiping, your phone, checking for messages, browsing your Facebook, browsing, I don't know what, Shopee, browsing whatever, right? And with this, increased usage in the internet penetration as well as mobile phone, the economy of China is very, very reliant on, technology, right? Today, if any of you here have been to China, even of course before the before MCO and pre-COVID days, if you've been to China, you will notice that their economy, I think, is almost 70 to somewhere around 90% digitalized, which means that today if you walk on the street, you go into a stall trying to buy bubble tea, they will say, hey, I try not to accept cash. I only want WeChat Pay or Tencent Pay and stuff like that, right? So then you can see how far ahead China is in terms of digitalizing their economy. And look at what happens. They were first in this pandemic, and they are almost already out of this pandemic, first in and first out. And if you look at the consumption, despite this pandemic, there's really no stopping to the Chinese consumers. You see, the number of millionaires in China is continuously growing, and their middle class is also growing, by more than 45%, a huge number, because we all know the story in Asia, where it is going to be very much predominantly driven by the consumption of the middle class, right? And of course, we all know, the 11 Singles Day sale, and every year after year, Alibaba has recorded, their record sales every time they go into or they launch the Singles Day sale. But if you ask me, now it's getting a bit too much already, because if you look at Lazada and even Shopee, they're having all this sale, like 1 sale, 2 sale, 3 sale and stuff like that, and it's getting a bit too much and tiring to be honest. But it still does not stop people from shopping and consuming. Okay, now other than that, I want to bring your attention to the fact that because there are more and more rich people right, or the middle class in China, that actually means that they have more excess income where they can now spend, right? I before this pandemic, when I was sharing this product, I like to use this example. So if you were to say 10 years ago, okay, go to Europe, let's say you go to Paris, you walk into any of this luxury store, right, LV, whatever, like Gucci, MS, and you will notice that in the past, people don't speak Mandarin, right? And people would just say that, talk about, hey, what do you want to buy, da da da. And the Chinese consumers are mostly neglected because they can't communicate. But because of, the increase in the number of millionaires, the increase in the middle class, and the fact that the way they spend has, definitely a huge impact to every country's economy, and people now welcome Chinese tourists, and to the point that in Europe they have employed a lot of all these Chinese speaking or Mandarin speaking sales assistant to actually market and sell and service this group of Chinese consumers. So from this point, right, I would like to say that it is in fact the trend of their consumption clearly is something that cannot be ignored. Okay, so let us lay down the options that are available in Malaysia should you decide to consider investing in China. Of course, there are a couple of unit trust funds in Malaysia that tracks China market, which we will not get into. But currently on Bursa Malaysia, there are 2 ETFs which have already been listed, which is the Trade Plus S&P New China Tracker, as well as the Principal FTSE China 50 ETF. There is one new ETF upcoming, which is the Value Partners Sharia China A Shares 100 ETF, which is going to be listed on 28th of July. Now, given the listing of this new ETF, I thought I want to do a very quick comparison because we often get asked as well, like, what is the difference between these two? In the past was 2, right? Now it will be 3 ETFs that invest into the China market. Okay. Now, first of all, the Trade Plus S&P New China Tracker is managed by Affin Hwang Asset Management, and it gives you or provides you exposure into the new China economic sectors. So this particular index that we are tracking specifically look into the new China economic sectors. So it wouldn't have, all your manufacturing, your steel, even banking. It's not part of it, right? Whereas the Principal FTSE China 50 gives you exposure into the top 50 largest and most liquid Chinese companies. Okay, so the new ETF, so I need to help my competitor do some advertisement also. The Value Partner Sharia China A Shares 100 ETF gives you exposure into the top 100 Sharia compliant stocks within China. So the good news is those of you who are looking for a Sharia compliant product, you can actually consider the Value Partners ETF, and it tracks the top 100. The Principal FTSE China 50 tracks the top 50. The Trade Plus S&P New China, as you can see, currently we have 108 constituents in, which means 108 stocks in the portfolio. Okay, and this number can actually grow or can actually increase or decrease. So the important criteria that the S&P New China Sectors X A Shares Index actually looks into is that they only select stocks within this new China economic sectors. Now, this is something interesting, which is the next line, investment holdings. So the Trade Plus New China Tracker gives you exposure to basically H shares and ADRs. What are H shares? What are ADRs? H shares are Hong Kong listed shares, all right? Chinese companies, but listed in Hong Kong. So we call them H shares. ADRs are American Depository Receipts. They are Chinese companies listed in the US. For example, Alibaba, right? H shares, for example, Tencent, okay? the principal FTSE China 50 actually invests into H shares, red chips, and P chips. Essentially, they are all listed in the Hong Kong. And for value partners, they invest directly into the A shares. A shares means stocks that are listed in the mainland China. Okay, so if you ask me, right, these three ETFs actually, even though gives you China exposure, but they are actually quite different. Okay, and if you compare the management fees, our ETF charges 0.5% per annum, and the other two charges 0.6 per annum. Okay, so if you look at the TER, is total expense ratio. It is a little bit high as of December 2020, but that's because at by this date, right, at this date, the AUM of the fund is at about 20 plus million Hong Kong dollar, but it has grown to 75 million Hong Kong dollar right now, which means that the TER would have been reduced in the coming annual report. So let's then take a look at what is their top 10 holdings of these three ETF, right? So if you want to compare, you can take a look at the comparison that we have done. So as you can see, the Trade Plus S&P New China Tracker is actually quite, I would say, concentrated, even though there are 108 stocks in it. But the top 10 companies already make up close to 60% of the entire portfolio. Okay, so you can see Alibaba holds the highest weightage at 10.33%, followed by Tencent, Meituan Dianping, AIA. Okay, whereas the value partner Sharia China A shares are, or I would say that it's almost totally different, and the top 10 only takes up about 34%. Okay, now let's take a look at the sector, right? So given that the new China economy, is focusing around consumer consumption, as well as, clean energy and healthcare and stuff like that. So the consumer discretionary takes up 50.9%, 51%, of the entire portfolio. Communication services at about 23%, and healthcare at 13%. Now, if you look at the FTSE China 50, what is the difference? They also have a huge weightage in consumer discretionary. However, their financials pie is actually huge at 28%. Now, because the FTSE China 50 index is a very typical conventional index where it just pulls out the top 50 companies, Chinese companies listed in Hong Kong, and that's why you get a bunch of financial stocks in there. Whereas the Trade Plus New China does not have financial stocks because financials is considered an old economy, right? And if you look at the value partner Sharia China A shares ETF, consumer is actually relatively low. Technology here refers to technology hardware at about 14%, and healthcare is at about 24%. So you'll be wondering, right? Just now I mentioned that technology is actually part of the new China economy. How come here doesn't have a lot of technology? The reason for that is really because companies like Alibaba, like Tencent, they are being categorized as consumer as well as communication services. Okay. Now, let's take a look or a comparison between the three indices that these three ETF actually tracks. Okay, so of course, if the performance of our ETF not so nice, I won't show lah. I'm just kidding. Okay, so what happens is that if you take a look at the performance of these three indices that the respective ETF actually tracks over the long term, as you can see, the new China Sectors X A-shares index has performed relatively, outperformed the other two indices by quite a fair bit. However, if you look at the shorter term return, then the China A would have done a lot better, right? If you look at the annualized 3-year return, for example, the Dow Jones Islamic Market China A100 index gives you a 22% annualized return. So I guess we all know that the A-shares market is relatively more volatile as compared to the H shares and ADRs. Okay. Now, so I want to talk, touch on very, very briefly on how the, index is being constructed. Why is it important that we have to talk about the index? Because investing into ETF is equivalent to you investing into the index. That's why you need to know how the index is being constructed. So the first step to this is that what S&P will do is look at all China Hong Kong index, right? Where it has all the Hong Kong and ADRs, okay? So XA shares here means excluding A shares. So no A shares, yeah? Only Hong Kong and US listed shares. Now, the second thing that it will do or screen is to look for stocks within the new China economy sectors, all right? So anything that doesn't fall within the new China economy sectors like banking, like manufacturing will be automatically excluded from this in this second step. Okay. Other than that, they also look at the market cap as well as the 3-month average daily value traded has to be more than 8 million before it is being included into this step 2. Okay. So if the stock is actually not liquid, where the 3 months average daily value traded is actually below 8 million, then these stocks are also excluded. Okay, so after including these stocks, then step 3 is where they actually look at the stocks, look at their market cap, and then they will weight the constituents or the stocks based on the market cap. And at the same time, there is also something that they do, which is they will cap each stock at a maximum weight of 10% to avoid ending up with very, very heavily skewed index or component. Now, for this particular index, it is definitely your long-term growth story for China, and we have 2 stock code because 0829EA is traded in MYR and 0829EB is actually traded in US dollar. So today, if you already have US dollar in your bank account and you say that, hey, instead of putting your money in a USD FD, which yields you nothing, you can consider investing them into, say, this particular ETF. And when you trade the 0829EB, you are settling in US dollar. So the recent last close was at about $7.90. It has reached a record high, a 52 weeks high at $10.10 in February this year. Of course, it has corrected quite a fair bit, which potentially could be an attractive entry for those of you who are looking at China for the long term. And of course, the record low was in last year where it hit a low of $5.26. So imagine if you have bought, at the low in March, and if you sold it at a high, you hold it for a year, you double your money. Okay, of course, still cannot compare with glove stocks where it can go up, I don't know how many 1,000%. Okay. So let's take a look at the performance chart. So this is the performance of the ETF versus the index that we are tracking. So this is to show you that the ETF actually tracks the index relatively closely, and at the same time, we have made our first income distribution on 13th of November 2020 last year, and we distributed 38 cents Hong Kong dollar. So it's about, I think, 20 cents. 20 cents ringgit, I think, if I'm not wrong, can't remember. And it gives you a yield of about 2.5%. So some of you here would ask, because a lot of investors like to collect dividend, and then they ask, does this ETF pay dividend? The answer is yes. We aim to deliver annual dividend payouts, and the last one was in November. So you can expect the next dividend payment sometime end of the year. And bear in mind that the yield will not be very high because we are not investing into dividend yielding companies. These are really growth companies, and that's why the yield that we distribute may not be as high. Okay. Now, if you have any questions, I'm done with China. If you have any questions at all relating to the China ETF, you can put in the comment section, and then later Dawn and I can discuss about them. Now, the second ETF that I wanted to share is, just now I ended the previous slide saying that many investors in Malaysia look for dividend paying investments. Now, if you are the type of investor that wants to look into getting paid income distribution or dividend on a consistent basis, then this could be something that you can actually consider. Now, I want to talk about this product, but before I continue with this product, I want to introduce this thing called smart beta strategy to you. Now, what exactly is smart beta? I'm not sure if any of you heard of this word smart beta. In the US, there are tons of ETFs that are termed as smart beta. Essentially, what smart beta tries to do is, first of all, active, right? What they smart beta essentially is trying to combine active strategy and passive strategy, and then and then it comes out as a smart beta, right? So what essentially it does is that on the active side, it tries to put in rules, okay, that they can sniff out potential outperformance, for example, okay. And then at the same time, because they don't want to, make it so active in the sense that like a fund manager every day look at it in and out, and we want to also manage, the cost, the transaction cost, the trading cost, and stuff like that. So they turn those rules into passive manage. Okay, I hope I'm not too confusing, yeah. And then you will end up with smart beta. Let me give you an example lah. Okay, let's say today we have a smart beta factor called value. Okay, essentially value. When we talk about value, people will look at sometimes the ROE, the PE, and stuff like that, right? So these are measurements that the index provider can actually put into under the active category. So they have screening, right? The stock selection screening. They put in all these rules, and then followed by a very, very passive strategy where it says that maybe the rebalancing or recalculation of it happens every quarterly or every semi-annually, and then they will end up with a smart beta index. Okay. Now, I want to talk now or introduce you to this particular index that we are tracking, which is called the MSCI AC Asia X Japan EME Index. Don't ask me why all this index name very long one. I also don't know why. Okay, so essentially, what this index is trying to do is to sniff out REITs. Okay, what it does is it will look for REITs within the MSCI Asia X Japan Index, where it has more than 2,542 constituents. That's step number one. The second thing, okay, this is the active component that I mentioned in the previous slide, which is dividend sustainability and persistence screening. So what this index will do is it will actually look for REITs that gives dividend that is sustainable and persistence. So what it does is that it will exclude those negative payout ratio. It will exclude REITs where suddenly, in a year it has an extremely high payout ratio, and at the same time exclude those which has negative 5-year DPS growth. Okay, so all this exclusion essentially is an active screening. Okay, so this is the active portion that I mentioned in the previous slide. And then subsequently, the result of that, the REITs will then be weighted based on their market cap as well as their dividend yield score. So this particular index actually weigh the REITs not just based on market cap. It also looks, or rather, it also favors REITs with higher dividend yield. So the higher the dividend yield, it will be allocated higher weightage. Okay, so market cap is not the only thing that they look at. And of course, in order to avoid concentration, again, each REITs are also kept to a maximum weight of 10%. And it will be rebalanced quarterly. So this is a diversified REITs index. However, even though it has, exposure into the different REITs, the country allocation or concentration is pretty much in Singapore and Hong Kong. So like you can see from this slide, Singapore takes up close to 80% of this particular ETF or this particular index. okay? Whereas 30% is from Hong Kong, right? And a very small percentage in Malaysia. So this particular ETF gives you the exposure to S-REITs, Singapore REITs, right? So today, if you are interested in getting your hands onto Singapore REITs, which are, which pays higher dividend yield, and you don't want to open an account in Singapore, and you don't want to trade through your local broker because of the expensive fees, then this could be something that you may want to consider. Now, if you take a look at the performance, this particular ETF was listed last year, July 2020. So it has just turned 1 year old, and we have actually made 2 income distribution. So we paid out an income distribution sometime in April this year, and the second one was just recently paid out. I have just received my income distribution yesterday, paid to my savings account. Okay, now the return since inception for this particular ETF has been 6%. Okay, now so these are actually the holdings. So if you are interested in any of the ETFs that I mentioned, which is the China and the REITs ETF, you can head over to our website. We announce the entire portfolio of what the new China ETF holds and what the Asia ex Japan ETF holds every day. So if there is any update, it is all transparent and disclosed to you daily. So to conclude, so why invest in the Asia ex Japan REITs ETF? Number one, if you want a dividend focused strategy that pays you consistent quarterly dividends, is something that you can consider. Second thing is it's an affordable investment option because currently it's traded at about 108, 109 thereabout, and it gives you a diversified REITs portfolio. So don't have to pick which REITs to buy, just buy a basket of REITs will do. All right. So this particular ETF is traded in ringgit. The stock code is 0837EA. And last close was, this is the NAV, is at about 107. And the record high is there about as well. Record low was at 92 cents in October last year. Okay, so this ETF also has recently, gone up quite a fair bit. I think it was hovering around the $1 for the longest time, until recently, where we see more opening up of the economy and value rotation and sectoral rotation, and we see that these REITs has actually performed well. So I will end with this slide. So as you can see, we have different ways for all investors to reach out to us. So if you have any interest at all, you can follow us on our Telegram, on our Instagram, Facebook, as well as we have a WhatsApp hotline that you can WhatsApp our ETF specialist. And of course, the tradeplus.com.my website has got all the information that you need. Okay, so I will end here. I'll stop sharing and I will pass the time back to Don.
Hi, thanks, Li Chu. Can you hear me? Can you guys hear me? Can everyone hear me?
Yes.
Yes, okay, because there was a comment that mentioned my mic wasn't working well. So yeah, anyway, okay, I think we have quite a few questions, quite a good response here today. Thank you for your questions. But before going to that, I actually have one question myself, because as I was watching this, I was wondering, like since this is foreign ETFs, like should we look at it differently, like things like the market, the environment, and all that? Like what should we look at differently comparing to just investing in Malaysian stocks?
Okay. Generally, investing into ETF and unit trust funds, they're actually quite similar, in the sense that we usually say that when you invest into ETF or even unit trust funds, try to allocate a longer time horizon for it. So like, for example, if you look at stocks, right, you probably will look at their PE ratio and then compare it, read their financial statements and stuff like that. But for an ETF, it's actually quite difficult to do that because you are essentially buying a basket of stocks, right? So the minute you buy into China ETF, you are essentially holding 100 stocks, right? You're holding the 100 stocks. So the measurement becomes very different. So if you ask me how would I pick, I personally will not even bother. So what I like to do is I look at things from the macro, right? So which economy or which country could potentially, be the way forward, or their economy could potentially grow. I would typically allocate my funds to that sector or to that region or country, and I use ETF. So I just essentially just put my money there and chuck it away for a few years before looking at it. Of course, I look at it on and off, but I guess the measurement is very, very different. But of course, unless you're talking about trading it more frequently, then I guess you have to take a look at the economic data. But typically people use ETF using a macro top-down view lah. So meaning they have to always look at the macro, then use ETF as a way to get exposure.
I see. Understand. So the point is mainly is to look at how that particular economy is performing before selecting, instead of looking at each and every stock, because that would be kind of crazy, I guess.
Yeah.
Yeah. Okay. There's a few questions here. There's one asking, what is the requirement to list an ETF in Bursa?
Requirement to list an ETF? Wow, are you an ETF issuer?
Maybe it's an upcoming competitor. Or maybe
Okay.
some. I think they're more asking like the regulation for like how safe the
Okay, I was just kidding. Even if you are, I think we as Trade Plus, right, from Afin Huang, we definitely welcome new issuers, because the more the merrier, right? Because today, as you can see, there are not many ETF issuers going out there, doing marketing, educating investors, and we are probably one of the most active issuer. So the more people or the more issuer we have on board is actually better for the market, and we will definitely welcome them. That's why I also did advertisement for Value Partner, even though my competitor, but I just advertise their ETF a bit. So essentially, the requirements to get the ETF listed is, number one, it has to be issued, of course, by a licensed fund management company in Malaysia. We typically will have to select an index, and then draft out the long prospectus, submit to Securities Commission, and then submit to Bursa for listing approval. And there, to be honest, there's not a lot of requirement in that sense, if you're familiar with the fund management industry lah. But if you want, then you have to go and read through the ETF guidelines by SC, and also the Bursa listing guidelines. I don't think I will bore you guys with the details because it's quite a lengthy process.
Yep. I think at least they roughly know how it works lah.
Yeah.
There's a question from David. Can Reits ETF give out dividend by cash? I think we did have one of these questions back then. Yeah.
Yeah. So we do pay out dividends in cash. Currently, there is no reinvestment. I think there's an option to reinvest for some stocks, right? Reinvestment plan. We don't have that yet. At the moment, all dividends are paid out in cash.
Okay, we have one here from Haris Iskandar. Is this the famous Haris Iskandar? How do you screen for Sharia stocks in China? Is there any way you can? Do you know any way to screen this, or maybe the ETFs?
So I think, if I'm not wrong, what the index provider actually do is that I think they typically look at the gearing ratio, because gearing ratio is one of an important factor in screening Sharia stocks. Other than that, of course, they will filter out all the sinful activities or sectors like your gambling, tobacco, stuff like that lah. So typically those are the two measurement lah, if I'm not wrong. Other than that, definitely they would also have like a Sharia board that oversees the selection of stocks and then approve it.
Okay, thanks. And then there's one here from Alexander. Any plans to issue US underlying ETFs, which I think you have FANG?
Yeah. But FANG is a leverage ETF. I think many have been asking us to launch a US underlying ETF.
Yes.
Actually, to be honest, we struggle with this because I don't know how to compare with Vanguard at a TR of less than 10 basis point. I seriously don't know how. I mean, unless investors in Malaysia tells us that hey, even if it's more expensive than Vanguard, it is okay. We will still invest into it. Then probably we will invest. I mean, we will issue. But I think as of now, the biggest challenge that we have internally is to convince ourselves how to launch an ETF, throw it out there, and clearly know that we are going to be more expensive than Vanguard, and then ultimately investors will still compare and say that hey, if I invest in Vanguard, I only pay what, less than 10 basis point, which is 0.1%, and we will probably be charging somewhere between 0.5%. So
Okay.
if assuming if we were to launch an US underlying ETF and we price it at 0.5% and a TR of about 1%, tell us whether you will invest or not. So if there are a lot of people telling us yes, we will invest, then we will consider launching.
Okay. If the audiences that are listening, if you think Trade Plus Afin Huang should launch a US underlying stock ETF, please type yes in the comment below, so that they can look into that.
Yeah, like last I think last session we asked about, somebody asked about crypto, right? So I
Yeah,
say if you
crypto.
if a lot of yes, then maybe we can consider.
You can show this as evidence that the market wants it.
Yes, correct.
Okay, there's a question from David. It's more on the market, and is what is your view on US-China trade war? That will it affect China shares? But since our topic here is ETF, maybe we'll talk on ETF.
I can briefly talk about it. Of course, the US-China trade war will continue to be there because I think earlier on somebody said, right, that US will never let China cross them and become the largest economy, which again, it's very, very, true. I think it's very hard for a Taiko who is in power for so long try to let go and suddenly say that hey, somebody overtaken me, imagine, no face lah,
Yes.
right? So I think they will not let it for sure. But China has got, given their status right now and their power, I do think that they also have their own capability to do a lot of things. That's why they always retaliate, right? So you see them fight, and then what the recent case was that they kind of say that hey, we're going to stop all this listing in the US, and then these Chinese companies say I want to pull back all my listing in the US, move it back to Hong Kong, etc. So as far as the ETF is concerned, this does not really concern us because the minute they pull off their listing from US and move it back to Hong Kong, it just means that the ETF will now redeem or sell off the position in US and then move to Hong Kong, the Hong Kong listed shares. So of course, at the end of the day, the US market is still the largest and most liquid. But I don't think it will impact or affect the performance of all these Chinese stocks when it moves its listing back to Hong Kong. That's my view.
Let's see. Okay. Okay, there's a question here. Is Trade Plus regulated by SC? I think I can answer that. Yes, because I think if they are not, their stocks can't be listed on Bursa already.
Yes.
Okay. Is there any ETF that is tracking the Hang Seng Index, or any plans for it?
Not at the moment.
Okay. Let's see what other questions we
But
have.
why you want to invest in Hang Seng? You look at the China economy, the performance, it's quite clear, right? Unless you're telling me that you want something that's very conventional, then I would suggest the closest proxy is actually the FTSE, the principal FTSE China 50. I think if you compare that with Hang Seng, I believe the performance is quite highly correlated. So if you want the exposure into Hang Seng, then do consider that one.
Okay. Another one here from Ka Wing. How do you recommend to invest in ETFs effectively? Do you buy low and hold, or keep accumulating for dollar cost averaging, or what kind of approach? I think we did cover this in the last session as well.
Yep.
Maybe we can talk a bit, then we can get them to go back and watch it.
Yeah. I think if you ask me, it's easier to just accumulate lah, right? I'm a believer of DCA, but unfortunately, of course, in the stock market, the brokers don't facilitate the regular savings plan, right? So it's quite difficult for investor to do it. You have to very discipline every month or every other month go in and then buy lah. That's the only downside. But other than that, again, this strategy, to be honest, is very personal lah. Like for example, if I so happen monitor the market and I see the price drop or correct quite a fair bit, and I'm a believer of that ETF or that region or sector, I will put more money in there. So it's really depends. It really depends on yourself lah. Whether number one, you have the discipline to every month remember, hey, time to top up my investment into China, and then you go in and invest. Or sometimes it just happen, hey, market crash, oh, it's a good time to add more. Then you can add more. Yeah.
I think this is in line with what you say, like if they are independent to put in every month. Because Jerry here is asking, like, does Trade Plus have any plan to work with any brokers to offer like a regular saving plan?
Yeah, I think we do, but we have to see how to go about this lah. Yeah, because I think to do it with unit trust is easier, but to do it with stocks at the moment is a little bit more cumbersome. But definitely it's something that we are looking into lah.
I think it's something interesting to get people into the market, to get them start investing and saving. Yeah, I think it's something good.
Yeah.
And maybe we'll take last 2-3 questions. Yeah. Okay. There's one here. Wait, I was eyeing something just now. The covering just now, add on a second question is that what should be the recommended weightage in an ETF? How many percent should you put? Do you usually advise people what kind of method?
You know what? I'm going to direct you to a webinar that I just did last week or 2 weeks ago. Go to the Trade Plus Facebook. We do have some suggestion into the allocation of the different ETFs in Malaysia, where you can effectively build a portfolio consisting of ETFs in Malaysia and still get about I think somewhere between 8 to 10% annualized return. So go and watch the recent webinar.
Yep, that's good. Now he has a whole video to answer his question. Okay, I don't think there's any other questions. Let me check on Facebook. Okay, I think we're good. So any last words and advice for people right now, those tuning in today?
I
ETF
think
or not ETF or anything?
I think what Trade Plus, or rather Afin Huang, has been trying to do, I mean, over the past few years, is the fact that we have been launching different products that gives you foreign exposure. So if you want to look into getting your hands on foreign exposure without leaving Bursa, because sometimes if you trade via a local broker, it's costly. Then I guess ETF is definitely an option for investors to look into. Again, I would say don't get too caught up with the fact that it's too costly as compared to Vanguard, but you need to help us to get there lah, right? If Afin Huang or Trade Plus can get to the scale of Vanguard, clearly the fees will come down, right? So it's a matter of time, I would say. So don't kill the ETF market with a lot of presumption too early. Do give it a try. Do give it a chance, lah. Okay. Other than that, of course, do educate yourselves. Do a lot of learning to understand about how the product works before you start investing. Okay. So yeah, that's all I have for today,
Okay,
Don.
good, great advice. Thank you so much, and thank you so much for your time once again. So
No
I
problem.
hope everyone here learned something today. So if you guys need more information on Trade Plus ETF, you can check out their website and also their Facebook page. There's a lot of educational information there. So do like and share this video, and share out to everyone so they can learn more about this ETF, because I think it's something very interesting to look out of the Malaysian market only. Yeah, so that's all from us today. Thank you everyone for tuning in. Stay safe and take care. Thank you.
Okay, thank you. Bye bye.